Hello, everyone, and welcome to the inaugural Lido Tokenholder call. Apologies for being slightly late here, but we are on air, live, and ready to go. So, first up, we have a presentation from Lido co-founder Vasiliy. If any of you have any questions, feel free to post them on Twitter, YouTube, or LinkedIn. But please note, don't share any links because you may get the ban hammer and your message may not be displayed. So, without too much further ado, we will answer all your questions after the presentation, or we'll do our best to answer as many as we can. I'm sure there will be quite a lot. And yeah, let me hand over to Vasiliy to present.
Hey, folks. Welcome to the Lido Tokenholder update call. I think that's the first one for us. So I'm happy to start this tradition. First, I must say that this is the call for only informational purposes only, not an investment, legal or tax or financial advice, not a magic spell, nothing like that. I'll explain why, who am I and why I'm on this call, why I'm talking about it. I'm co-founder of Lido. As of pretty recent, I'm also executive director of Lido Labs. Lido Labs is a foundation that makes the main efforts in development and support of Lido the protocol and Lido DAO. I used to be chief technical officer of Lido contributors and research lead, and recently moved to the executive director position, which I will be explaining a bit later. And the agenda for today is I'm going to explain the situation that we're listening right now, what's the market position, Lido position in the market, etc., etc. What the story here, how we got into the position we have now. Update the token holders on Lido Labs leadership changes, how we think about the business side of Lido, how do we want to restart the growth. We will also touch buyback proposals and in general questions and answer from the audience. So I will be speaking like and explaining things that are like very simple, because like I'm not sure that how prepared the audience, like all of the audience. So sometimes there will be things that you already know, and please be with it, because like there is I think almost 200 people on this call, and I will be talking to all of them. So what's how Lido the protocol works? What the business model of Lido the protocol? It's a bit more complex than it's depicted here on the slide, but the general gist is user will deposit ETH to Lido protocol. That ETH gets staked on the Beacon chain, and user gets a receipt token, staked ETH in return. ETH is being funneled into staking modules via staking router. Some to the curated node operator set, some to community staking modules, to simple DVT module, different models within the parameters and different ways of stake. And staking rewards return to Lido protocol, and most of it, 90%, is being funneled back to stakers in forms of staked ETH rebase. About 5%, slightly less since CSM got introduced and SDVT as well. But about 5% gets to the node operators, and slightly more than 5% gets to Lido DAO treasury. So the business model of Lido protocol is that 5% that goes to Lido DAO treasury. Lido DAO is a decentralized organization with a token holder voting that is governed by LDO token that has control of upgrades and changes in Lido protocol, and control of Lido DAO treasury, which is used to fund operations of Lido Labs and other foundation that work with protocol, and for any other purposes that Lido DAO is thinking this treasury can be spent. Lido Labs doesn't have any significant holdings of its own. It's fully dependent on Lido DAO for funding operations. Our current and historical financial position, starting with 2021, is on this table. I'll walk you through it as best as I could. Essentially, starting with Lido was launched in end of 2020 in December. End of 2021, we got to 1.6 million ETH. Then we grew up until the end of 2024 with about 9.7 million ETH in protocol in the end of 2024. And in 2025, we are experiencing negative growth of the amount of ETH taken protocol. Protocol revenue that we get with this like 5% fee that we talk about is at since this time grew from 3,000 to 30,000 ETH, and in this moment in 2025 it's 16,000 ETH. When expressed in dollar terms, it's 8, 30, 51 $1 million and $20.3 million until like at this point in time. But a lot of this revenue had been in staked ETH and hasn't been sold yet, so it's actually not in dollars, so it grows with the ETH price and shrinks with ETH price going down as well. Our spending through the years, if you take collectively liquidity and operational grants, had been only going down. It started at about 1.90 $100 million, mostly in liquidity incentives with the LDO token in 2021. Then it went down to about $100 million, then $17 million of liquidity and growth grants, 14 million, and in this year it's about $4.5 million. Operational grants, which is mostly contributors compensation, but also includes audit costs, which are sometimes significant, and various overhead like software, legal, etc., had been growing until 2023, and then steadily went down. Like we started with $14 million, then 16, then 51 in 2023, 40 million in 2024, and 17.8 at this point in time, and with projection, which will have some variance in it because year hasn't ended yet. We don't know exactly what this number would be, but the projection is about like 31.5 million or something like that on operational grants in 2025. So total spending, for example, in 2024 was 54 millions, and projection for 2025 is about 46.5 or something like that. So far, the protocol in previous years has never broken profit, though it went steadily up, like the amount of spending that had been pushed for protocol growth and operations had been steadily going down, and we sorry. So that's where we are right now in financial terms. Market share that we have had been more or less stable, though it grew until 2023 to 32.4%, and then it went down in 2024, and then it went down further in 2025. We have a sizable treasury that has 28.9 thousand staked ETH and 41 million stablecoins for a total treasury size of $176 million at current price. There is also a sizable amount of LDO in treasury, but it shouldn't be counted as a dry powder, I think. We are still the largest largest way to stake in Ethereum, with Coinbase and Binance being behind almost twice as much. How we got there? I'm going to focus on 2023 versus 2025 markets, because like how we got from the larger share to the lower share. How we think about it is we divide the staking market in segments. There is a segment of simple LST users, exchange staking, low risk staking, APR maxis, and uncategorized other way to stake, like home stakers, something that we don't analyze on chain and stuff like that, things we don't know about or that don't fit in either of this category. So in 2023, the LST market segment was the largest at 35%, and it shrunk to 20% in 2025. APR maxis was a really small segment in 2023 because there wasn't a lot of way to get APR on ETH or on staked ETH. The only products in this category were a small amount of leverage stake in hour, and small compared to now, I mean, like, and some amount of incentivized liquidity liquidity incentives for some protocols, some additional incentives, etc., etc., was pretty small in size. In 2025, it's a very large category that has restaking, leverage staking, junior pools in fixed yield protocols, liquid vaults, what have you, a lot of market segments essentially. Exchange staking also grew, though, but not by much, by 5% points. Low risk staking is fairly constant. This is usually simple delegated staking for high net worth people and institutions and like funds and stuff. And the share of uncategorized also was reduced. So in 2023, we did have almost all the leverage stake, which has mean that like the share of APM axis, we have about like 90%, but it was a small category. These days it's about 35%, which is like leverage staking and collateral restaking. We are still leader in simple ST, that didn't change a lot. And we have some small foray in exchange staking. So we continue to lead the LST segment, but the segment has shrunk from 35% to 20% over the last 2 years. Biggest growth category has been APM axis, and Lido there is used but is under pressure. And exchange staking also grew, and it's very hard to wedge into if you're not an exchange. It's something that exchanges usually try to keep for themselves, though we have a presence there. Main reasons we didn't grow in this period is that Lido failed to ride the wave of restaking with Lido's own products. We did focus on improving the staking products in a way that don't bring much growth in short and medium term, like dual governance and community staking. They did a good job at improving the brand, improving the perception, and the fact of security, reliability, improving the DRM alignment, which I think is a big factor in the issuance discussion being on hold for now. But they didn't bring much growth from the largest category that was relevant in these 2 years, which is APM axis. So this has resulted in negative growth for Lido share. We also had the lowest growth budget in class. In 2023, we already had like pretty tame one, about I think $17 million or something, compared to literal billions that had been spent by restaking LRT projects to gain the share they get in incentives. So to turn the situation growth around, we need to start like doing things a bit differently and approaching the decision making with a more like stronger commercial sense, and that's what I want to do when moved in the position of executive director. So Lido Labs hasn't changed much in composition, but it did change in structure. I am now an executive director, which is mean like call most shots. Isidoros is chief of staking. He's responsible for the staking unit, staking products. Sam is chief legal officer and chief operating officer of Lido Labs. It's largely the same people, except like we had to lay off about 15% of the contributors, which was hard, but I think necessary move for us. I used to be the technical lead and research lead for Lido, but now I'm moving to be an executive director, which in the position that has been exercised before in Lido Labs. I will be streamlining leadership, creating clear reporting lines, and introducing clearer business thinking in line with our mission. So the way we think about the business is we measure the success by making best staking product in Ethereum and growing surplus for the token holders. I'm thinking all the proposals and products that we spend any significant effort of or capital on must have clear commercial sense. And I've separated the Lido Labs budget into break-even run budget that is about 31 million for maintenance of the core business, and separate growth budget that will be spent on initiatives to make our share grow or otherwise improve the business line. So the directions here can be growing share in staking, which is possible now and time sensitive because a lot of stake is coming in via insti vehicles, ETFs, ETPs, treasury companies. And there is also a lot of very mobile stake in high priority direction. Improving your share in APR Maxis cohort is about as easy as making a product with high APR, which is not always easy, but at least it's very sticky stake that you can capture if you have a superior APR project. We can try to increase top line revenue per share of market, which is on staked ETH product is ill-advised because ramping up fees is not great. We will lose stakers if we try to do this. This can be fought in dual governance as well, and we are already in pretty good place on overall fees. It has a way to happen with V3 vaults pricing, adjusted and synergetic products like liquid vaults, lending markets for staking, offer a different kind of utility and value for the staker, and you can take additional portion of value capture from it if you offer a genuinely good improvement. We can reduce the cost of revenue, as in our cost of revenue is mostly not operator fees and a bit of revenue share schemes. And we already got some moves in the direction. Community staking module is lower take rate for not operators overall, and higher take rate for the DAO. But it's pretty small for now. We can reduce operating expenses, which we already did to an extent, and we can branch out or adjust products by diversifying the revenue streams. I think that right now is time to invest in growth because we have a strong starting position. We have best-in-class LST product. We have durable business model. We expect rapid market expansion. Timing is pretty important here because it's going to be to take under a year, I think, until this wave of stake is over. We have dry powder in treasury to spend on growth, and we have liquidity, we have brand, we have network effects in combination with relaunch that would allow us to enter new market segments or have a stronger presence in existing market segments for users with stronger needs for customization. So we can restart growth in different sectors. The major one for us are liquid, simple liquid staking segment. Growth here is limited, you can't grow significantly after 90%. exchange staking is pretty hard to get into if you're not exchange. They protect this segment very hard. We are in hyper segment under pressure currently, but user base is very mobile, so it's a good segment to fight in. And low risk staking is a big green field for DeFi protocols. It hasn't been historically breached. For simple LST, the real success in growth can only come through integration with custodies and other platforms. I don't expect a lot of this growth of the segment size, but there will be some with integrations into places where customers exist, like custodies, and with the favorable LST ruling of regulation that could help to get simple LSTs into institutional packaged products. APR Maxis segment, I think that we will have short-term pain, but midterm, I think we will gain back the share. The segment itself, I think, will grow as long as there are sources of APR to go around. Right now, it's like mostly restaking token expenses, but though not exclusively. Current existing products are staked with Lupin and being a collateral in other keys. There will be supply shocks, which will push up ETH borrow rates and have the segment to get instability, which is probably is not playing in Lido's favor. But with V3 relaunch and DeFi strategies enabled with staked vaults, and further down the line, I expect additional source of APR here coming from incentives on sidecars that can also be collected with looped staked vaults. There can be pretty noticeable growth. On exchange, it will remain difficult. The category size is high, but the whole premise is that like exchanges like to get staking revenue as well, and we are currently are listed in Bybit and OKX that allow us to have some small share in the category. But I think it's going to be a tough battle to get there, and maybe it's not worth it. We will still pursue listings if it's possible, because it improves the liquidity of the token and is useful as a advantage in other for users in other staking segments. Low risk staking, I think, is a pretty big opportunity. It's 20% category side. Our current share is 0 because like the most of the category is made out from simple delegation when stakers get the ETH to the stake to the node operators who have sales pipelines, good relationship with them, low risk in terms of legal, regulatory, smart contracts, etc., and clear path in this segment is staked vaults that would allow people to customize their staking, and node operators to use Lido's liquidity and integrations to attract more clients, and custodial wrapper products, which are pretty good for Insti. I think there is a good validation in this approach with the recent news of native yield on Linear, which in a few months is slated to be staked through Lido V3. The way it works for the segment V3 vaults for the cash flow class is more or less like that. Most of this category is not operators like P2P, Figment, running like big sales teams to get customers in contact with them, offer them different staking options. And at the moment, they at the same time have no incentives to sell liquid staking or products or DeFi strategies because they lose customers. Every ETH that is not staked with them and is deployed to Lido or Aave or wherever else is not deployed to them and doesn't bring them money. Like it might be like in best interest of the client to run leverage staking because they want like high API and are fine with the risk. But not operators have zero incentive to offer this to client because they lose the client to DeFi. And at the same time, they have very little customization opportunity. Like they don't, they have hard times to offer a unique product because like they offer staking. Staking is the same for everyone essentially. They can have a like slightly different setup or like very different setup, but most like a lot of stakers don't very much care about it or understand it at all. Lido V3 allows the node operator or any other essentially channel partner to offer liquidity and DeFi participation to the client without losing them and without losing the staking fees. This is delegation plus plus for them. So in short, we are ready to expand beyond simple ST segment. It's been mostly simple ST and a bit of API maxis, but the segment has shrunk. V3 allowed us to wedge into further into API maxis segment and low risk markets, using LST liquidity, but going after different kind of customers. And there is already good tailwinds for regulations. It's not a done deal yet, but the climate feels good. One other thing that I want to touch on this call is buyback proposals. There had been several community-led buyback proposals recently. The latest one was dynamic buybacks. I think that's like this is directly aligned with the goose goal for this year that was set and voted in. I think beginning of this year, right? And but on the concrete implementation, I am proposing longer timeline for two reasons. One big reason here is that we are weeks away from major improvement in regulatory clarity. It would be prudent to wait until there is a clear understanding what value accrual mechanisms are troubleless and what value accrual mechanism can bring us trouble. And like rushing into it right now doesn't make sense when there is like not a lot of time to wait on this. I think we need some time to discussion because there are several possible mechanisms for manual, semi-automated, fully automated ways to do things like that. So my recommendation here that we will put on the as a proposal for discussion is implementing triggerable rails to buy LDO staked ETH. That would work with any future mechanism who would implement, like who would want something like that by the LDO staked ETH. We'll call it Nest. And spend next 2-3 months on selecting the best framework. And end of year, make a holistic decision together with Goose 3 goals for the next year and budget for the 2026 to allocate and implement some ways to automate or like not automate or execute buybacks. So one more thing that I'm asking of you is you as a token holders, you have vested incentive aligned to help Lido grow and be better. So I'm asking you to, if you have a adjusting business, or you're like adjusting protocol or not operator or something, start building on staked vaults. Testnet is out. You can start working on it. I think it's a great primitive. We would appreciate help to drive further into TradFi. We would be very grateful if you signal your demand to use custodial exchange for staked ETH. If it's not listed there yet, we are listed on some, but not all, and we want some pressure on them to be listed faster. There is also sometimes there is a need for seed capital in products like ETPs, ETFs, and if there is, if you have or your friend have something, someone have some capital that they would want to park for a year in ETP or ETF to help and to help Lido at the same time, please reach out, and we will keep you in mind when there is a need to do something like that. And finally, water delegate your LDO. It will help a lot because right now the quorums are pretty hard to get, and this takes a lot of energy that on lab side it could be spent on things that directly improve Lido protocol or Lido's market share or Lido new products or something like that. We would prefer to spend more effort on growth and not on collecting people to please vote for the pretty obvious thing. And now for questions and answers. Thank you.
Hello. So yeah, we're going to move on to the questions and answers section. I'm not sure if Vasiliy and Sam and Izzy. Yeah, we're going to introduce some more members of the Lido Labs team. So Sam, our Chief Legal and Chief Operating Officer, and Izzy, Chief of Staking. And let's get into the Q&A. So thank you very much, Vasiliy, for that presentation. Lots of interesting and important information in there. So yeah, let's get into the questions. First up, let me just read it out for the benefit of the viewers. Could you provide a breakdown of protocol expenses, particularly liquidity expenses, so it's easier to understand where these costs are going? Who wants to take that?
Yeah, I'll do a small answer on this and then ask Sam to pitch in. In general, liquidity expenses these days are pretty small with good results in actual liquidity. It's best in class. It's not even comparable to competitors. And a lot of it is, I mean, is not a lot of liquidity, but a lot of the expenses goes into having Lido represented in exchanges, custodies, etc., 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 which you can't see on chain. So that was the original question in, I think, in dynamic buybacks post in the governance forum, and like not all of it is on chain visible. And Sam, can you please pitch in a bit?
Sure. I guess maybe just to add to the Vasiliy, in terms of number, the liquidity expense have been decreasing over the years. Just to give you a sense, from 2021 at 176 million to 2023, 17, last year being 14, and year to date being 5. One other thing to note is we are, even though we're one of the most liquid tokens on the market, we do virtually no subsidies as part of that, which helps in terms of the expenses here. That's it. Then we can go to the next question there, Stu.
No worries. What growth initiatives did you do in the past couple of years, and how did they work out?
I'll let Easy answer that, and we'll pitch in if I remember something that I cannot.
Sure. So there's a couple of ways to look at this, I guess, and maybe it'll help if we go back to Vasiliy's approach around like the different market segments. So if we look at like pure LST play, most of the growth initiatives basically had to do with improving liquidity, so like making users' lives easier, creating like the best kind of staking product for users. So like withdrawals, basically, like the way that the withdrawal mechanism works in Lido essentially means that withdrawals can be faster than they would be natively on Ethereum. And it also means that if you want to exit your position via swapping due to the liquidity, as opposed to like natively redeeming the token through the primary method, the protocol, you can do so at a much better price than basically any other protocol allows for. The second way to think about it is expansion across different market locales. So the last couple of years, like most of growth was happening on layer twos. So there was a question earlier in terms of like what kinds of things was liquidity expenses being spent on. It was spent on creating sufficient liquidity for user demand in places like burgeoning L2s. And another aspect around this was basically getting increasing the accessibility of stETH to users around the world. So that might have been through integrations on centralized exchanges, integrations into wallets, and integrating a variety of different like Lido interfaces, since there isn't just one interface, but like it's a decentralized protocol. So wallets or applications might create native interfaces, or they might be using the Lido Identify staking widget. So basically just making sure that Lido is available to as many users as possible.
I can add a couple of things here. One thing that is over past 2 years, right, that did work out pretty well was working with the money markets and vaults protocols all the time for the leverage staking. Like in 2023, there was a really huge increase in stake in via our lending. So it started small, but like it went up, and then it went down because like the part of it was eaten by restaking, leverage restaking. But until then, it was like really, really good. So that's one thing. The other thing is Aave Prime, which is done together with Lido, the separate market to money market to have leverage staking and leverage restaking with the staked ETH. Also had some success for protocol growth. It didn't overcome the negative trend, but it did stop it, I think, pretty visibly.
And maybe one minor thing to add here, which is like tangential but related to growth. So with the development of like a variety of different staking router modules, which are basically avenues for node operators to use the protocol, some of these either indirectly or directly led to growth. So right now there is the simple DVT module, in which basically hundreds of node operators ranging from home stakers to professional node operators are running validators together in what we call DVT clusters. And the DVT infrastructure providers create incentives for running these validators. And these incentives are essentially channeled towards a mellow DVV vault where they gather and promote growth. And at the same time, there's also the community staking module, which is the permissionless module to allow any node operator to use the Lido protocol. And as a part of using that module, there's a requirement for bond. So right now, I think there's like approximately 10,000 ETH actually working as a part of the bonding mechanism and supporting essentially not only the increased decentralization of Lido as a staking protocol, but also growing both the network of node operators using the protocol, but also protocol TVL itself.
Yeah, great question. Just before we move on to the next one, I'm glad you touched on that, because I know the question was very much directed towards growth in all financial terms. But as you mentioned with CSM and the growth of home staking, growth is also decentralization, and these are other things that are being focused on with initiatives. So I'm glad you brought that up. So for the next question, it's a question for Vasiliy. How much new ETH do you expect to flow to Lido with V3 and other features in 2025-26?
It's a hard question because it's hard to tell. Like, it's very hit or miss thing. We can get all, we can get nothing. We can, like, this is very risky things with just a few deciders who will be basically making this record. Like protocol, treasury companies, and ETF issues. So it's hard to say. I think it's going to be pretty good for us, honestly. I'm feeling confident in the CPU product. But I think I'll go into making any like target and prediction after they go live and we have initial market response.
Fair answer there. Let's move on. Unless anyone wants to comment on that, we can move on to the next question, which is, given ETH's recent price recovery and stronger market sentiment, has this influenced Lido's short or medium-term roadmap?
I guess I'll answer that. It's like, I think it's mostly no, and the reason that we were always bullish Ethereum and like always bullish ETH, and like we didn't see the like 1700s as a reasonable price for ETH. So like for a long time, and we made plans based on like ETH recovery, and roadmap is pretty much tied to ETH. So like when ETH is going through, it doesn't make sense to change it because it's already bullish, and we are just getting vindicated at this point. That's how I put it.
Yeah. Nice to see that as soon as we did this, ETH pumped. So I think it was a reflection of our own roadmap. Next question. How do you plan to benefit from ETH ETF staking, which is most likely going to be staked with Coinbase and more custodial staking providers in Lido? Is there a plan for Lido to benefit from this? Let's take that.
We are working relentlessly on this direction. So and with the regulation going the right way in US, it's no longer as one-sided. It was like, I don't know, a year ago or something, year and a half, I guess. So and also Coinbase is not most likely the most likely stake. It's not operator for ETFs. Like, it's so far what I'm seeing is not going to happen. I think the largest issue right now for this is like tax uncertainty. It's not clear how LST based ETFs are supposed to be taxed, and this is like the major roadblock, which is I think solvable, but we'll see how it goes.
Anyone want to add anything to that one? Or nope. Okay.
Maybe just as a catch-all for this stuff. So like a lot of people are asking about stuff that like obviously can't be talked about unless it's actually announced. So like bear in mind that like don't ask for like confidential business stuff. Like I don't know what you expect us to say. Obviously, like contributors are like really believe in the Lido protocol and the solutions that it offers. There's no other way for institutions or treasury companies to stake large amounts of stake and to do so in a decentralized way, and in a way that gives them like liquidity and the choice essentially to decide whether they deploy this stake immediately into DeFi and then compound their rewards, or to be able to exit at a moment's notice, or just ride the normal like withdrawal queue. I think that's a very, very winning proposition. And in terms of like integrations with custodians and stuff like that, the recent regulatory clarity in the States is an immense tailwind, and I think it will be relatively straightforward to try to take advantage of that.
Yeah. Now, this next question, again, if we want to move on from Frank, is very much relevant to your last points. And again, I don't know, we can really discuss it. If are you guys working with any US ETF on their ETH staking solutions?
That's the same question, I guess.
Yeah, we can probably move on. What's the plan to onboard these large ETH treasury companies?
I think that V3 is a pretty good product for them. It lets them to be very in control of their own stack. It will let us to be able to make competitive offers on fees and stuff, because vaults are customized, and it will get them access to liquidity when they want it, and they will not have to pay for liquidity when they don't want it. So this is a pretty big change in the available market products, and I think that these are just perfect for them.
Yeah, no, I'd also mention to everyone, I mean, a lot of the people listening to this call may not be aware of V3. It's currently in testnet stage, but yeah, we'll leave a link at the end of the call, and I would direct anyone who isn't aware of the vaults and how this is going to work to have a look at that. Let's move on to the next question. Should Lido allocate incentives or additional investment to boost stVault adoption? At this stage, growth and user adoption should take priority over profitability.
Yeah, obviously, we have growth budget for that. That's exactly for it. It just I don't think it will take a form of straight incentives. It will be more selective marketing and channel partners relationship stuff.
Yeah, makes a lot of sense. And yeah, I know there's been some deep debate in the YouTube comments about incentives and how much maybe some protocols spend / waste on them. So yeah, a very conservative view is quite a good one there. Do we have a next question? We do. Thanks for doing this, guys. Is that the final question? It's a cat. It's always a cat.
You're welcome, cat.
I guess it is. Before we close, is there anything anyone would like to add? Any general points? I'll take your silence as probably not. And I'd like to thank you all for your time, for coming to answer these questions, and also for presenting. I'd also like to thank the audience for coming and for asking their questions. And yeah, we will have another token holder update next quarter. These are quarterly calls. Next month, we will have a community call with interesting guests and talks. So I urge you all to join that one. And yeah, check out the QR codes at the end here. Scan them. Check them out. And once more, thank you all for your time. Have a nice day or evening. Goodbye.